Hello everyone, very honored to be here, to be the last person to give the presentation for today. So my name is Chandler Fang, I'm the product manager in Ripple. Actually, I'm covering the RippleNet product, which is a cross-border payment solution. Before joining Ripple, actually I worked for JP Morgan, the blockchain payment team, for quite a few years as a product manager. And even before that, I was a quantitative researcher, so I was doing stock derivative trading and also the risk management on traditional assets. So the reason I gave that background here is about the topic today. I will go a little bit beyond the traditional payment and RippleNet, but go through the DeFi landscape and also the risk management, which is the downside of it, right? So I learned something from the Wall Street, and we always look at the downside of the traditional asset. So while we're talking a lot about DeFi, everybody is so excited about DeFi, what is the risk? What is the downside of it? Right, so let's try to tackle that solution or tackle that problem. Cool. So today I'm going to cover 3 topics. First one is a bird eye or top-down approach to look at all the DeFi services and their ecosystem. The reason of a top-down approach is I always have a pain point when I started looking at DeFi a few years ago. There are so many DeFi protocols here and there, right? It's really hard for you to map what exactly they're doing and what type of role they are playing within the entire system. The second topic is the DeFi's value and its challenges. And very naturally, we can go through the third part, which is given the challenges, how can we as a developer or investor to manage and mitigate the risk? Right. Start with a very basic concept. What is decentralized finance? Here's the definition, in my view. First of all, DeFi is an umbrella term for a variety of financial applications, and it is based on automatic protocol on blockchain. And the final goal is try to disrupt the financial intermediaries. There are 3 things I want to highlight, right? The first one is DeFi is a very broad term. You may have heard DeFi here and there. People want to tag their protocol to DeFi, say, hey, we are doing decentralized finance. Always take it as a grain of salt because there's not a clear definition of what exactly is DeFi. But in my view, the core value or core feature of DeFi is an automated protocol based on blockchain. And the final goal, which is most people are claiming about, is to disrupt or to cut off the intermediaries, which in the end saves some money and cost. So when we talk about DeFi, right, never forget about another 2 cousins, which is CeFi, which stands for centralized finance in crypto world, and traditional finance, like everybody is using every day. So what's the key difference between DeFi and CeFi? I think the first one is whether the financial service is automated through smart contract or it is actually provided by a centralized entity. So using one example, right? For example, if you want to do stock trading, you want to buy 1 share of Apple stock, right? You don't need to go talk to NASDAQ or talk to New York Stock Exchange, say, hey, I want 1 stock of Apple. You can go directly to Fidelity, which is a centralized place backed by a centralized entity to say, hey, can I buy or sell or manage my portfolio, right? And a very similar concept in crypto world, we have what? Coinbase. It's also a centralized company. It is a centralized service. And Coinbase, to some degree, has the power to sanction you, to block you, or stop providing service to you. However, in DeFi world, for example, Uniswap is one of the most popular decentralized exchange. Technically speaking, everything is automated, right, through a smart contract, AIM algorithm to perform the trade. And there's no one single person or single entity behind Uniswap say, hey, you know what? I know you are bad and you should not or you cannot use Uniswap's service. And the second key difference is actually anonymity, right? This is a very interesting one, which a lot of people feel, oh, I'm so happy that DeFi gave people more privacy. Let's use one example. if you want to open a bank account in Bank America, right? To some degree, Bank America need to at least know your legal name, your gender, even your SSN or some of your credentials, right? However, in a decentralized finance world, if you want to set up a wallet through MetaMask, right, for people's contact, wallet in crypto, to me, is very much similar concept as a banking account or bank account in traditional finance, right? So you use a wallet to host different crypto assets. And in this case, MetaMask doesn't know who you are, which is in terms of your name, your age, your SSN, right? To some degree, they know there is a wallet address, but they are not physically know your person, your identity. So that's another key difference between between decentralized finance and the others like CeFi and traditional finance. Last but not least is the final goal, right? Remember, DeFi aim to cut off the cost through what? So cut off the intermediaries. So as you can imagine, between Sarah and Robert, right, if they want to make a payment to each other, right, either they can go through bank, which is a centralized party, say, hey, I take your money from Sarah and send the money to Robert, or those two people can go through a blockchain, right, a decentralized services. And in this case, at least people claim, right, you're using a decentralized service, there's no intermediaries, the cost could be lower. All right, so I talk about what's the definition. Now let's jump to the ecosystem here. So how I approach this ecosystem or very challenging topic here is, let's first look at what is the major financial services in traditional finance world, which is everybody's using. Because you're going to realize most of the DeFi protocol has their cousin or brother in the traditional finance. Basically, they are replacing one of the major services through a decentralized way, right? Here's a very, very high-level summarization. In my view, there are three key buckets for financial services: trading, lending, and investing, right? When we talk about trading, in a real-life use case, Bob wants to use some money to trade for exchange for some goods and services. He has to use some currency, right? This currency, in most of the cases, is a fiat currency like USD or Euro, for example. It is one of the service within the trading bucket. And besides currency, if you want to trade any asset, right, whatever a linear asset like stocks, bonds, or derivative, right, Bob Alice can use E-Trade, a brokerage, or Robinhood, those type of services to perform those actions, right? Jumping to lending part, we have secure lending and unsecured lending based on the collaterals. But basically, if you want to borrow some money from the bank, right, Alice, for example, she can use her credit score or she can use some collateral to claim or to prove the story, say, hey, Bank America, lend me $5,000 and I will pay you back someday. And that's a very typical business, a typical service in traditional finance. Last but not least, investing, right? You can use Fidelity as one of the centralized places to manage your portfolio. Now, I added two more columns right besides it, which is CeFi and DeFi. You may start to realize that most of the major services provided in traditional finance, we have a very similar service in centralized world and decentralized world in crypto system. So let's start with the currency layer, right? So we have fiat currency in traditional finance, but in crypto world, we have stablecoin. We do have DeFi stablecoin like DAI from MakerDAO, which is backed by a decentralized entity, or we have centralized stablecoin, USDC from Circle and USDT from Tether. When we talk about trading, we have decentralized exchange like Uniswap and Curve, also DeFi focusing on derivative trading, and don't forget we have centralized exchange like Binance or Coinbase that pretty much everybody is using right now. And talk about lending, one of the top protocol for lending in decentralized world is Aave. And in centralized world, it's actually very close to the traditional finance. There are some entity or financial institution like BlockFi or a Silvergate Bank. They take crypto asset as a valid asset. They see the value of it, so they can use those crypto assets as a collateral and provide some dollar to you or lend some dollar to you. Last but not least, investment, right? And in DeFi world, we have Y-Earn, Convex on top of Curve. Those are a few very popular protocol. And in CeFi world, we have very much similar to traditional finance, like a centralized crypto fund. 3AC Capital, Grayscale, basically they collect the money. The money in this case mostly are crypto asset from their client, right? And then they make money from it, just like traditional finance, mutual fund or hedge funds. All right. After setting up all those information, I finally jumped to the most colorful and the most challenging page for this entire presentation, the DeFi Ecosystem Map. Actually, it is generated by Masari, which is is a crypto research entity, but I think this is a very, very good view for our current DeFi ecosystem. And the first thing I want to bring your attention is there are 4 big boxes on the screen here, right? And the biggest one in the middle is actually the things we have covered about financial services, like decentralized exchange, lending, derivative, stablecoin, which is very critical, but it is only one of the box within the ecosystem. There are 3 more boxes beside the application layer. The first box at the very bottom is the chain layer, right? Recall all the DeFi protocol need to base on blockchain, smart contract. So there are smart contract ecosystem. There are scaling solutions to scale up, to roll up. There are infrastructure tools supporting those DeFi protocol. And at the very top, we have aggregation layer, which is one of the centralized place to aggregate different DeFi application into one place. So one single user can go to one place for one-stop shop. And on the left-hand side, we have the user and front-end layer, right? If I'm a user, how should I interact with all those DeFi protocol? I need to set up my wallet. I need to find the DeFi hubs to consolidate all those information. So there are quite a few things or quite a few parties linked to those layers. And those 4 big boxes as a whole create this entire DeFi ecosystem. And the next interesting thing is the dollar value besides it, right? The middle box, we have $230 billion market cap. And for the bottom layer, we have $700 billion market cap. Even though this is on April, right? So before the Luna crash, the number is smaller nowadays. But I do want to emphasize, this is a huge, huge market. It's a gigantic number. And this number may go even higher or much larger in the future because everybody needs to use some sort of financial services. It's for everyday usage. So if you do a quick recall, right, I mentioned 2 core values of DeFi. One is automated through smart contract. Second is greater anonymity. And then the end goal is try to cut off the cost, right? Try to reduce the cost occurred from the centralized intermediaries. Then everything sounds so good, right? All positive things, but there's no free lunch. So what's the risk? What's the downside of all those DeFi stuff? And one of the biggest takeaway I have is DeFi purports to be decentralized, but the full decentralization, a complete decentralization, is illusory. It's very hard to achieve. Using real example here, let's start with the core value number 1, automated smart contract here, right? So a key tenet of economics analysis is enterprise are not able to devise contract that cover all possible eventualities. It's very, very challenging. For example, in a centralized world, right, because there is a legal firm, there is an entity, so they can cover some of the contract incompleteness. But in a DeFi world, the equivalent concept is algorithm incompleteness, which is not very likely, right? If some of you are programmers or developers, think about how can you code something that cover all those edge cases or bug-free. It's very, very hard. So that's why using a real-life example, if you're using, for example, car insurance service from a centralized entity, right, and your car hit a plane, very, very rare use case, probably is not covered by a contract. But you call Geico, say, hey, you know what, this is not very normal, but my car hit a plane, I need some money back, right? And probably can file a claim and talk to someone. At the end of the day, there is an entity, which is Geico, say, hey, you know what? Yeah, there is some wiggle room and we can deal with that. But in decentralized finance, how could you do that? At least at this moment, if you are fully automated, right, there is a gap that cannot be bridged. So that's the trade-off between automation and completeness. Second part, anonymity, right? People claim that greater anonymity provide privacy. People loves it because, you know, it's kind of permissionless, right? You don't have to be KYC, but you can enjoy the benefit and everybody's equal. But the downside is, for example, you cannot protect against the bad actors. There's one example is Sifu Scandal. If some people know that, Sifu is one of the key members for Wonderland DAO, which is the DeFi protocol. But actually, he is a criminal from Canada, right? And no one was aware of that until someone leaked the news. Then everybody was shocked. And there is a big wave of discussion talking about, hey, why this guy, which is a criminal, is part of the core member of those DeFi protocol. That's why there is a balance between permissionless and prevent bad actors enter the contract here. And the last piece, remember, reducing the cost due to the intermediary, right? This is not always true as well. So one of the examples is about transactions, right? At least to my knowledge at this moment, handling a large volume of order of trade, centralized entity perform, at least in my view, better in a cheaper way or more efficient way than decentralized entity. So maybe there's a day that Uniswap can do all those trades in a much, much lower cost, but there are certain scenarios that centralized entity with intermediaries is doing a better job in certain use cases. Right. So that's kind of a trade-off of removing rents, which is a cost associated with intermediaries, versus increasing the efficiency, because some of the use cases, actually intermediaries are doing a better job. And the last example I want to highlight about the risk is about the DeFi hacks, right? That's a real number. Actually, this is not for DeFi hacks specifically, but the hacks associated with crypto or blockchain, right? And up to date, you can read that number. There is a $43 billion, not million, $billion got lost due to various reasons, right? Could be a protocol loophole, could be some of the rug pull, different type of reasons. And only 600 million, which is less than 2%, got returned. So 43 billion is not nothing, right? There are many people lose their money. There are many families lose their money as well. And as a financial services, you should be able to provide stability rather than instability, right? So there is still a big problem linked to security about DeFi. So that's why we jumped to the last 2 pages, which is the last topic for today, is as a developer or as an investor, right, how should we manage and mitigate the risk associated with DeFi protocol? So let's start with developers. There are a few things in the interest of time. We cannot cover all the details here. But first of all, the smart contract robustness, right? When you try to develop a DeFi protocol through an automated smart contract, I mentioned quite a few things about how can you cover all different edge cases, right? How can you make sure that end-to-end testing is good so that it won't be hacked? And there are certain ways, for example, a third-party security audit can help you to do that. And the next thing is about the tokenomics, right? Because a lot of DeFi protocol are using incentive, which is kind of the money incentive, to incentivize user to be involved, to engage DeFi protocol. But when you design the tokenomics, right, how can you make sure that the incentive is in the right way, right, which is encourage engagement rather than there is something called like yield farming, or there is quite a lot of behavior like investors purposely try to grab the incentive from it and then leave the protocol immediately, right? So you need to be very careful about your tokenomics design. Last but not least, operation excellence, right? When you maintain or run your DeFi protocol, I try to find a good example. Sometimes even I can use Luna Crash as an example because to some degree, when they decide to apply a pool change, switch from one pool to the other, there is some of the operational process can be improved. And if they can bridge the gap, actually, probably Luna Crash may not happen in May, probably in a later time, but not that early, right? So I think as a developer, while you are building up this entire DeFi protocol, you have to be careful about the process you are running. And as an investor, what you can do, right? I actually had a lot of experience because I came from Wall Street and we do a lot of risk management on traditional assets. But in the interest of time, I only list out a few risk factors. And if you are interested, because I only have a few minutes left, we can catch up offline. I did have a lot of hands-on experience trying to deal with all those risks. But at a very high level, start with regulatory risk. Because DeFi is still quite a new thing, there is always a risk linked to legal lawsuit, compliance on those DeFi protocol, right? Whenever you want to make an investment decision on a DeFi protocol, you have to consider, is there any legal lawsuit associated with this DeFi, with the team, or with any person, or there's any compliance concern associated to that? You need to price in that type of risk. Number two, credit risk. More specifically, rug pull or bank run or investors say, hey, you guys don't know me, right? Because anonymity, recall that. So I will just grab all the money and leave this DeFi protocol. So how can you quantify those credit risk and then put it into your equation? The third one is very much the most popular one, the protocol risk, right? For example, when you invest in the DeFi protocol, have you ever actually looked at the DeFi white paper, understand how they design this ecosystem? There probably could be some loophole, right? In terms of a hacker may hack the protocol and steal all the money, or there are some terms baked into the programming language that say, hey, at the end of the day, there is one person who can take all your money outside of a DeFi protocol without your permission, right? If you don't review the code, probably you don't know that, right? The protocol risk sometimes is quite significant. Next one is the liquidity risk. And there is always a saying which is, I think is a very good saying, like when you need, the liquidity is always not enough when you need it, right? So what does it mean here is, using a Luna crash as an example, when Luna start crash DPEG, right, the UST start DPEG, and if you want to swap your token outside of the pool, you start to realize there's no liquidity at all, right? So as an investor, what you can do, either you monitor the liquidity in a real-time basis, right? When you see the liquidity drains up, you may need to pull your money ahead of time. Or you monitor the price or the stable coin DPEG degree, right, to check if the UST is going DPEG, and you may want to take some actions there. Last but not least, liquidation risk. Every time you apply a leverage, you borrow some money, you may get margin call, and you may under the water. So the liquidation risk sometimes is quite significant. And you may need to monitor that once again. Also, you need to find the right cushion, right? How much or what is your leverage you are able to suffer from. So with all that, during the interest of time, I want to do a quick summary for today, right? So first of all, we define what is DeFi and what's the core value of it. Then we start to introduce the entire ecosystem, not only on the application layer, but there are a few key components associated to that. Then, after we talk about so much value, what is the downside? There are quite a few challenges linked to DeFi, and they are a big hack. Then, as an investor or as a developer, there are a few things you need to check, or there are a few boxes you need to check. And if you are seriously into making an investment to DeFi protocol, not only read through those factors, right? Probably you need to build up something or create a framework to capture all those risks. All right, so I will stop here. And thank you so much for today's last presentation. I hope you enjoy it. Thank you so much.